Finally, let's talk about MMI, which is one of those companies with a three-letter acronym, which is always interesting, but it came from the merger of Metropolitan and Momentum. So I guess that's where the M and the I came from. 2010 was when that deal was done. The market cap is 30.5 billion rands, price earnings ratio 16.37, dividend yield of 8.11% based on its recent numbers.
Yeah.
Don't know if it'll do that again. Let's go straight to the share chart, because it also did well in the process when it was saving money from the combination of those insurers over that sort of 3, 4, 5 year period. Since then, though, it's battled. It lost a bit of ground. There's now been a pretty much wholesale managerial shift where Nicholas Kruger, the CEO, is still in place, but basically all of his lieutenants have been taken out and replaced. They're going to push, they say, into more retail-oriented work, and they're going to double their sales force and so on. So they're kind of doubling down on their existing niche.
Yeah, listen, they're similar to Liberty. Remember, Momentum, which is one of the brands, is the equivalent of Liberty in terms of client base that it has.
Yes.
You know, the high-end market.
Again.
The Metropolitan business, which is the lower-end market, is actually doing reasonably well. But you know, they've also got an asset management business, Momentum Investments, not doing well as well. So you know, it's almost the same tale that we spoke about.
Because you're right, Momentum is positioned in the market. It does have its Multiply loyalty program, which is somewhat similar to Vitality, and it's kind of fairly visible brand in terms of sponsoring sports events and all that kind of thing.
Yeah, so they've really upped their game, the Multiply loyalty brand, in the last few years. There's also some other nice businesses. I mean, Guard Risk, for example, did a deal with, it's a cell captive insurer. It did a deal with African Bank a few years ago, you know, when they did that restructure. So it underwrites a lot of the credit life policies in African Bank, the new African Bank, on a cell captive basis. So there are pockets of things that are doing well. But of course, the big shareholder here is RMI, which is the Rand Merchant Insurance Group. You know, the guys from RMB. So
is that an issue?
I think for me, they
also
also
got
own
like a 25% stake.
But they also own Discovery and they own Outsurance, and look at how well those businesses are going. So I think there'll be a lot of pressure from the likes of RMI and Remgro as well, you know, to ensure that these guys change their business model or do something to help lift their the share price.
Are you going to be in this one hot right now, or are you going to take a wait-and-see approach?
No, I'm not hot on this one. Not now, not right now.
So we got the combination of anxieties in the general market, plus the turnaround challenges and new management teams. So this is definitely one to wait and see. Take a 6-month view, see where they are next time.
Yeah.
Okay, not hot on that one.